Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. So recently I've been really interested in silver's price lately. I think it's at a very interesting time. The perfect storm is brewing up, and I definitely think that if silver was going to make that right now is one of its, has one of its best chances to do so. So I found this article from Seeking Alpha. The link will be in the description, but it's really interesting because this is a chart analysis, but they really do dig into some really interesting points, some prime points and examples of what could be happening. The article is titled Silver's Prices with Explosive Upside, showing the potential, showing how much opportunity silver has. And I do want to share this with you guys because, right now things are interesting. I've been in precious metals for several years, and right now it just something is different. And I'm not trying to be like a silver pumper, just something really is different. More people are engaging, media's covering it more. Gold and silver are actually appreciating at decent, rates right now. Stock market volatility, several different things are just it's almost like everything's just kind of falling into place. And I'm trying to keep an eye on this. I want to keep a pulse on this because it is an interesting time. It's an exciting time to be in precious metals. But anyways, I want to just jump into this article. Let's check it out. So this is from Seeking Alpha, posted yesterday, August 18th. So silver prices have lagged gold prices since 2017, which has pushed the gold to silver ratio close to the all-time high, which is like in the 90s, mid 90s, like 95 to 1. The gold to silver ratio is near an all-time high, but we think silver will start to outperform. Silver prices have explosive upside potential over the coming years in our view. So they're talking about the gold to silver ratio being extremely high, like 95 to 1, and silver will start outperforming gold, meaning silver appreciates and gold is good, or gold either depreciates, and that means the ratio is going to correct back down to lower numbers around 70 to 1, which it used to be. Anyways, let's keep going. So it says silver prices have lagged gold prices 2017, which has pushed the gold to silver ratio close to all-time high. Silver prices are also significantly below what is predicted by our pricing model. We think that the reasons for this subdued performance are transitory, that silver will outperform gold again as the next precious metal cycle continues to rapidly unfold. In spring 2017, we introduced a framework for understanding the formation of silver prices. In this report, we are going to use this framework to analyze the recent performance of silver and give an outlook for where we think silver is heading over the next coming months. In our framework piece, we concluded that silver is both money, store of value, and an input commodity, and thus the impact of both industrial and monetary demand needs to be taken into consideration, which I definitely agree with 100%. I always talk about this, where they actually are incorporating silver's intrinsic value and also as a commodity, but also an asset with the technological, industrial, and medical world, which a lot of people do not incorporate or do not understand how much of an influence, how much of a, of a pull that also has in a market. The demand and supply is both there, and they're also incorporating both of these, all sides of these, all angles, which I definitely think is extremely important and, will be a lot more accurate when talking about silver's potential in the future. Anyways, on the one hand, silver is a counterparty, risk-free form of money where replacement costs set the lower boundary for prices, the same energy proof of value that underlies gold prices. Thus, silver should be impacted by same drivers as gold prices: real interest rate expectations, central bank policy, longer dated energy prices. On the other hand, silver is a commodity with extensive industrial applications, hence changes in industrial activity should impact the price of silver as well. In our framework note, we also discussed the two main reasons why we think that silver tends to outperform gold in bull markets and underperform in bear markets. Because the value of global silver stocks is much smaller than that of global gold stocks, which the result of silver being used in industrial applications, a rise in monetary demand for silver has a disproportionately large effect. In other words, when demand for metals increases as an alternative to fiat currency, there is simply less silver around to change hands, which is an interesting point to note. Because I was talking about this, where if we're looking at gold from a supply demand factor, surplus factor, from an industrial use, how much of it is used in technology, that is interesting that it is a much smaller market. These industries still need to use silver for their assets as a precious metal because nothing performs the rate that silver does. But gold is king basically, and there is a much higher demand for gold. So the ratio, the factors that are pushing these precious metals or influencing the prices would be a lot. It wouldn't have as much drag or much pull as gold would. As a large part of global silver production is byproduct of other mining activities such as copper production. This base production is usually enough to meet industrial demand and normal monetary demand for silver. Because much silver is mined by product, the silver cost curve has a discontinuous shape, meaning that the base production is relatively cheap, but meaningfully ramp up supply. Much more costly pure silver projects need to become economically viable. Hence, when a sharp increase in monetary demand leads to a shift on the cost curve, prices tend to increase sharply. So, I'm not gonna go over all this, but this is now they're going into these models that they came up with. I'm not gonna read out how it explains. I'm just gonna kind of go over it. So, Exhibit 1: if the supply cost curve changes abruptly, here, I'm gonna expand this actually so you guys can see this. So, if the supply cost curve changes abruptly, an increase in demand can lead to a disproportionately large impact on the marginal cost of future supply. So, industrial plus normal monetary demand, right here, this line, industrial increased monetary demands here. So you see the blue line heading up. This is cost versus volume, vertical axis, percent total objects and pipelines. So you see this slow gradual curve, and then you see right here D, that's 80%, and it's interesting because right here, let me talk. So the blue line is normal continuous cost curve. The orange line is discontinuous cost curve, which is base supply, which would be taking it higher, meaning it does have a bigger pull. But over gradual time, you can see how that can catch up. It's interesting that they are, using this in a chart, because I've never seen a chart like that where actually kind of it can bring to life, or bring in perspective what is actually happening and how it could happen. Silver prices have peaked in early 2011. We know that around $50. It was like $48. Subsequently, a gradual decline of low cost $13.70 an ounce in late 2015, around the same time when gold prices hit their low. Silver price decline was in line with finding of our model. Monetary demand for silver slowed down significantly as US dollar or USD real interest rate expectations rose from -1% to almost +1%. So as the dollar actually strengthened, people had their faith in the economy, had their faith in the government and banks, so they weren't investing as much into silver, which tends to be strongly negative correlated with precious metals prices, which is interesting because silver is more so than gold. As we have highlighted before, the decline in gold prices over the time period was exuberated due to repricing and longer dated energy prices, which most likely negatively impacted silver prices as well. However, unlike gold, which since has been on the upward trend of 40% from the lows, silver prices have been largely stagnating. So here's this is showing gold prices actually going upwards and silver actually almost being stagnant. So this is silver versus real rate expectations, and this is silver lagging during, here I'll enlarge it for you guys. So silver lagging during since gold to 2017, and the yellow mark is silver, this is gold, and then you see right here 10-year tip yield and silver price. So it's interesting to see that these charts are actually bringing something to life that not a lot of people do mention. I'm not going to go over all of these, but here's some of another chart right here I want to go over. One second. Oh, here's an ad. So right here, silver prices have detached from the predicted value. Let's check out this chart right here. So silver prices have detached from the predicted values of our model. So they're saying that it's actually in a upside right now. So silver price right here is the gray line. The orange line is predicted model, and this is actually appreciating at an extremely high rate. Very bullish, outcome. So why is silver lagging? We believe that the answer is probably a twofold. First, we have highlighted before, silver prices are driven both by monetary and industrial demand. which I was kind of talking about in my last videos. This is a contrast to gold prices, which are driven only by monetary demand, as industrial demand is small comparison. And this is exactly what I talked about in my last video, because gold is more of a commodity, silver is more of an asset. Silver has other driving factors more so than gold does. Gold is more used for jewelry, used for rings and necklaces, stuff like that, where silver has real industrial, medical, and technological uses. So the prices are definitely, are outnumbered by gold. I mean, yes, gold is used for technology and to some extent, but at a much smaller rate than silver is. So however, the relationship between the overall industrial production and the industrial silver demand has dramatically changed over the past years. Historically, the photography sector has accounted for a lion's share of industrial silver demand. So this is also a good point, because as technology that we're going up in the technological world, that we're advancing, and we're going to need more and more silver. These big business companies, these technology companies need more silver, because we're going into the digital age. Silver is highly used in technology. We need more of it in these things, in these assets, in these gadgets. So this is definitely going to drive silver price demand higher, meaning the silver price higher. The source demand almost entirely disappeared by now. In 2018, photography sector absorbed just under 40 million ounces, down from around 200 million ounces. So strong growth from other sectors, electronics, alloys, ethylene oxide, has been somewhat compensating for the declining demand of photography industry. So even though photography's down, 206 or 160 million ounces, other things like electronics, alloys, are also compensating for that loss. So it's almost like everything, since it's rising in so many different factors and so many different categories, even if something is down, it still will compensate for something else. So this is a really long article. I'm going to just kind of read the one of the last couple of points and then wrap this video up. If you want to check this out, the link will be in the description. But this is a really long article. It's a really good article, one of the best articles I've read in a while. So I'm just going to kind of read this summary right here. So we think it's possible, while on the rise of cryptocurrencies did indeed have a negative effect on silver prices over the past years, it was due to the specific environment when it happened. We don't expect much headwind to silver going forwards, and the gold to silver ratio is near all-time high. But over the past few weeks, silver was finally able to break out. It rallied from $14 an ounce to $17 an ounce as of today, an increase of 21%. However, silver only performed in line with gold, which rallied from $1,200 an ounce to $1,500 an ounce. As we've outlined before, we believe that we are at the beginning of an unfolding gold price cycle. Recent prices move bolstered our conviction. In such a bullish environment, we expect silver to outperform gold once again. Hence, the recent silver price rally, in our view, is just the start. So I definitely think this is a really good article. There's tons of different graphs, very, very informative, very educational. There was tons of different statistics and viewpoints, different angles they came from. I definitely think this is something that we all need to acknowledge and try to understand to the best of our ability. They also made some very good points, some relevant points that I haven't even thought about before, which allows me to have just more insight on it. So I definitely wanted to share this with you guys. But anyways, if you did enjoy this video, if you thought this was an educational or informational video, make sure to smash that like button. Subscribe if you're new. I post daily videos, so stay tuned. I'm going to post some more stuff probably today, definitely tomorrow. I've also posted a lot of videos over the weekend, so go check those out as well. Anyways, thanks for tuning in, guys. This was Silver Slayer. I will see you guys soon. Peace.